turn the time over to Diahanna Vallentine, who will be explaining to us creative ways to find life insurance even with cancer. So Diahanna, take it away.
Hello, everyone. Can you hear me?
Mm-hmm.
Great. Good morning, good afternoon to everyone who joined us. I appreciate you taking the time out of your day. Um, the life insurance is a topic that I found a lot of people coming asking me about, and I wanted to make sure you understood life insurance and understood there may be creative ways if you don't have life insurance to find it. John and I are going to go through the type of life insurance underwriting and creative ways near the end of our presentation today so that you can find ways to protect yourself and then look at what you currently already have in your insurance program. And perhaps you need to review that or take some steps to make sure you continue to have that coverage when you need it.
Awesome. Thank you, Diahanna. We're looking forward to the presentation.
So there are many benefits to life insurance. A lot of people think that it's only for a death benefit for family when someone passes, and that is not necessarily true. You can use life insurance for estate planning, for final expenses, for cash benefit, for treatment for yourself or other life needs while you're still alive. And you can also use life insurance for collateral for loans. If you have big loans or things you need to manage, you can pay off debt. There's a lot of things you can do with life insurance. And so we're going to go through this for you so you can make sure that you can make the best decisions for yourself. Next slide. So there's a traditional life insurance. It's the least expensive life insurance of all. It is a term insurance. Usually people who are younger will buy this insurance for a specific period of time, perhaps to make sure when their kids are grown, they make sure that kids go to college. And you pay for that insurance for that period of time and then it goes away. Now, I want you to remember there are a lot of term life insurances have options on there where you can convert a portion of it or all of it to a whole life or a permanent insurance policy so that you will have insurance later on. Okay, so it's the least expensive. It's called True Life because you're only paying for the cost of life insurance. There is a death benefit amounts can go from $20,000 up to millions of dollars, depending on what your needs are. There's a fixed time period from 5 years, 30 years or so. After that period of time, that insurance policy goes away unless you decide to convert to a whole life policy. There's full underwriting requirements depending on age and the amount that you're requesting for your death benefit amount. And we will go through the types of underwriting that will be required for each type of policy. Next slide. So again, traditional life insurance or permanent life insurance. This will be like your whole life insurance, universal life, variable universal life, and full underwriting was required. Now, with the term policy, depending on the amounts, full underwriting would require urine, blood, a lot of health questions. A lot of times they will send this information off to doctors to get your full background, medical background. And then depending on what they get back, you may be rated. Maybe you're a slight risk, you're a high risk, depending on what the full underwriting has found. Next slide. So the life insurance underwriting process, full underwriting required with medical questionnaires and exam, rating. You could be rated as very light risk, or you could be declined depending on what they found. And I'll tell you that happened with me and my husband. And it's always, as a advisor, I always tell people when you can get life insurance and you think or may not think you need it, go in and see if you can qualify, because the older we get, health things usually pop up and it could cause you to either have insurance that may be too expensive to keep, or you could be declined. There's simplified underwriting. This is one of the types of policies. If you do have a medical history, there are fewer questions. It's one of the last resorts to get insurance, and you will be rated or you could be declined depending on where you are with your health, what kind of treatment you're under, or what type of issues you currently have. Then there's guaranteed issue. Guaranteed issue has the least amount of underwriting. There's generally no questions, no exam, and they're guaranteeing the issue no matter what your health is. However, the cost could be very expensive. The coverage is lower, generally maybe 5 to 20 or maybe 30, $40,000. And there are limitations on that policy. The next slide. So here's some disqualifying conditions for traditional life insurance. Those are the term policies and everything. You have a terminal illness with life expectancy of less than 2 years. You have had or need an organ or tissue or stem cell transplant. You are on dialysis. You have Alzheimer's or dementia. You are in a nursing home or in hospice. You have cancer, not basal cell or squamous cell skin cancer. You have AIDS or HIV, or you are in a wheelchair because of a chronic illness or disease. Now, those things will automatically disqualify you for traditional life insurance, being your regular whole life insurance that can earn cash value, or your term policies. At that point, you may have to look at a simplified issue depending on what your illness is, or you'll have to look at a guaranteed issue policy that John is going to go through. Next. So simplified issue life insurance. The good things about it is you do not have a medical exam that's required. They'll ask a few questions. It's less expensive than a guarantee issue policy, and it is a permanent policy. So if you need something and you're older, you need something for next 10, 15, 20 years, you don't have to worry about paying for something and it goes away like a term policy. As long as you pay your premiums, this policy will remain in effect. The not so good things about it, you must be 45 years old or older, and there are certain medical conditions such as cancer that are disqualifying. Next slide. So some other possible disqualifiers. If you're currently bedridden in long-term care facility or nursing home, like I mentioned before, require a wheelchair, electric scooter, or oxygen equipment. You've ever been diagnosed or treated for Alzheimer's disease, dementia, congestive heart failure, diabetic coma, or organ or bone marrow transplant, have a terminal medical condition. In the past 12 months, you've been diagnosed with heart disease, or you've had a heart surgery. You've been advised to have surgical operation or diagnostic testing that isn't routine. And for that particular point, that can also disqualify you for a temporary or a term policy, because they don't know what's out there that you have not disclosed to them. Okay, diagnosed with any form of cancer in the past 2 years. Next slide. So we're going to start going through the guaranteed life insurance policies, and this is where John is going to pick up, and he's going to go over this with you.
Hello, everyone. Can you hear me okay?
Yes.
Okay, great. Thank you. I'd like to talk about the guaranteed issue life insurance in the biggest, broadest sense. There are options that you can help use to secure life insurance coverage. And it may involve not only purchasing a new guaranteed issue life insurance policy, but it may also include managing your existing portfolio, which we'll talk about a little bit later. Guaranteed issue is something that can be looked at when you've exhausted your other options. So most of us with myeloma will be denied full underwritten policies. We will probably be denied simplified issue policies as well. So if we're in our life situation feeling that we need additional coverage, then guaranteed issue is something to seriously consider. There are pros and there are cons to the guaranteed issue life insurance. When an insurance company is going to guarantee you a policy, even when they know that you may be ill or may have a terminal disease, they're obviously going to charge for that risk that they're taking on. And so it goes both ways in the sense that the pros are that we as patients and as applicants do not have to face any underwriting. So these policies that we'll talk about are guaranteed issue. There are no questions. There are no medical exams. There are no health questions asked. And typically, if you're going to look to purchase a new individual guaranteed issue policy, most of the carriers that offer these types of policies are going to want to issue a permanent policy. In other words, it's a policy that will last for you for the rest of your life. To keep that in force, you will have to pay premiums for the rest of your life. And the good thing about this is that those insurance carriers that offer these policies will not deny coverage. they typically will not increase their premium, and they typically will not decrease the death benefit. However, on the flip side of that, they do have some limitations. So typically those limitations are that they may have a waiting period. And that waiting period may say something like beneficiaries may not receive a death benefit if the death occurs within 2 years of the policy start date. One carrier that I spoke with, they have policies whereby if you died within 2 years of purchasing the policy, the beneficiary will not receive the full death benefit, but they will return the full premium that you've paid in to the beneficiary. So it's sort of a no-lose situation. However, these policies tend to have much lower death benefit amounts. They might be $1,000 or $5,000. One carrier that I spoke with, their maximum amount of coverage is $15,000. So you can buy blocks of life insurance from $1,000 to $2,000 to $3,000, or up to $15,000, which really would be considered a final expense or a death benefit type of policy. The other thing is that there are limitations typically on initiating those policies. So some might say something like you have to be within the age range of 50 to 80 years old to secure a policy. Obviously, the older you are, the more expensive it's going to be. Next slide, please. There are carriers out there that will issue a guaranteed term insurance policy. This policy is what it says. It's typically for a term of time, and that time period will typically be rather short and fixed. There will not be any cash value in this type of policy, but you might be able to purchase life insurance for 1 year, 5 years, or 10 years. Of course, the trick here is, do you know how long you're going to need it and what happens if you need it after that time period? So with a term insurance policy, if the doctor says, we think that you may have about 5 years to live, and you live to 6 years, well, then what happens? Well, the policy stops at 5 years, and if you live beyond that, then the coverage ends. In addition, again, these types of guaranteed issue term life policies will have lower fixed face amounts, meaning you might be able to buy a policy for $5,000 or $10,000, sometimes more, but we can't expect them to offer much more than those final expense type benefits. Next slide. Now, there are, in the bigger picture, ways to consider to secure life insurance coverage. And when I mean that, I mean to say that it usually would be a good idea to have some life insurance in force upon your death. And there are a number of ways that you can look in your current life to do that. One might be to look at your existing coverage. If you have a cash value permanent type of policy that Diana mentioned earlier, that you've been paying on for some time, you may have the option to stop paying a premium, what some companies call a premium offset, and allow the cash value inside that policy to pay for the premium going forward. That would be probably a good option, especially if your primary concern is cash flow. So if you're facing larger medical bills, if you're facing concerns about your ability to pay your fixed expenses with these new insurance costs, that might be an option. Consider offsetting your premium. In addition to that, your policy may have riders on it that you may have even forgotten about if you purchased it 10 or 20 years ago, I was, as a financial planner, provided quite a bit of life insurance planning to my clients. And I often would meet them later in life as they were preparing for retirement. And they will have forgotten that 25 years ago, they purchased a policy with a specific rider. One of those riders is called an accelerated death benefit rider. That rider allows the policyholder to access cash value from the policy if they're facing a terminal illness. And that can provide some cash flow and actually allow you to possibly keep your policy in force. Another rider that people often forget about is called waiver of premium. And that waiver of premium kicks in if you've been determined to be disabled, unable to work, and your physician signs off on that, then it may be that the insurance carrier will actually start paying your premium for you. And sometimes people overlook this because it allows your death benefit and your cash value to stay in force, even though you're disabled and may not be working or may not be working full time. Another thing to consider is benefits that you may have through your employee benefit program. Sometimes employee benefit programs allow you to purchase a certain amount of life insurance coverage, sometimes on a guaranteed issue basis. They might offer $10,000 as an example of death benefit for every employee that's actively working, even though they may be ill. Some of those benefits might include simplified issue, but it's typical that there would be a guaranteed issue option up to something, as an example, up to $50,000. But then if you wanted to buy additional coverage, you'd have to go through simplified or full underwriting, which may not be an option. In addition, you should look in your benefits information or talk to your HR people because you may find, as I did, that upon retirement, one of the retirement benefits is a certain amount of life insurance coverage. I actually discovered that because I wasn't really thinking about it, and I was thinking about retirement, but I didn't fully retire until after I'd been diagnosed. That was the trigger that encouraged me to retire. And upon retirement, I reread my benefits book, and I determined that I actually had a fixed amount of death benefit in that I was grateful for. I would never have to pay for that. It was a premium-free option, and I would retain that death benefit for as long as I lived. Now, the other thing I think is useful is if you have a life insurance agent or advisor that you've worked with, you should talk to that person and tell them what's going on. And they may be able to give you some good insight as to how you can best manage your existing coverage, or they may be able to steer you or guide you into some coverage that they may know about locally in your area that you should take advantage of. Now, as an individual, you can also go online and talk to one of the online brokerage services, such as SelectQuote. And you see SelectQuote on the television, and you see it online. I've talked to them, and I've worked with similar types of companies. And when I was discussing my situation and my situation as a coach with the representative from SelectQuote, I found him to be, number one, experienced in that he'd actually worked with some myeloma patients. Number two, he was very sincere in that he was there definitely to try to help people find the coverage that they're looking for, if possible. And he told me about carriers that I was not familiar with, that he had access to, that specialize in helping people with terminal illness secure life insurance coverage. So that's a good option. It's important to understand that you do not have to purchase anything from that online brokerage. but they are a good resource, and they can provide quotes from a variety of companies that you can consider. Another option is to talk to a carrier direct. One of the carriers that I'm familiar with and that has specialized in guaranteed issue coverage for over 60 years is a company called Colonial Penn. There are other companies out there, but you can go online and Google guaranteed issue life insurance and you will find Colonial Penn. And I've talked to them. I've had clients in my 35-year career that were in this situation, and I would sometimes steer them to a company like this, which really provides a specialty product. Their products are typically small face amount cash value policies, guaranteed issue, cannot be canceled, and may give you something that you're looking for. Another option is to consider associations that you might be affiliated with, such as AARP, or you may have a professional association, as I did in my life. I found that groups like the AICPA group or the Bar Association group or the Medical Association group may have options that you hadn't considered because you didn't need to. And they may, as a function of your being a member of their association, they may issue or provide for you a very small face amount policy that could be issued on a guaranteed issue basis. Similar to that is what banks and credit unions and actually credit cards can offer. I've had clients in my practice that were terminally ill who called me to say, hey, my bank just sent me a flyer and said that they're going to issue me $10,000, no question asked, should I get it? And sometimes I'd say, yeah, that makes sense. So banks or credit unions often provide guaranteed issue coverage available. And also credit cards. I know American Express in the past has offered a flat amount, $5,000 of life insurance, no questions asked. Just turn this card back in and someone will contact you and you'll be all set up. You have to understand that, like the associations, you have to maintain your account with those banks and credit unions and credit cards in order to keep that type of coverage. Diana, did you have anything else you'd like to add to any of that?
Well, actually, yes. Can everybody hear me?
Yes.
Okay, John did mention that you may have investment life insurance policies, like your variable universal life policies. And that if you have problems with cash flow, you have flexibility to not pay those premiums out of your pocket. As long as you have cash value, it could pay the premiums from there. But remember, you don't have to pay, it won't be pulling the entire amount of the premium. It'll only be paying the amount for your life insurance costs, not the investment costs. So let's just say you had $1,000 a month premium, and the cost of your actual life benefit would be, let's say $500. It would only pay $500, pull $500 for that premium out of your cash value. So your cash value can continue to be there, and hopefully, depending on how you have it in that policy, it can continue to grow. And keep in mind also with those policies, you need to watch those just like you would watch any of your investments, because they are investments. And you can change it from aggressive to conservative to mildly aggressive to fixed if you wanted to, based on that policy. So be aware of those things and don't just let the policy sit there and do whatever it's going to do without you managing it as well. The other thing, like you mentioned, I think it was really, really important, professional organizations that you may have been involved with, like, Bar Association, Medical Association, CFPs, CPAs, things like that. If you can still, as a retired member, join those, please join them if it's a need for you to get life insurance or other benefits. Additionally, they may offer things like long-term care insurance policies for you and possibly your spouse at very discounted rates because you're in a group policy. So there's a lot of things you need to look at and take and consider that may be very cost effective for you, even though you may have a terminal illness. The other thing is, when you have these policies, remember the Gerber life policies that a lot of people have. Some people have forgotten about those, but they may be automatically still being paid for. Look at those. Also, make sure that when you have these policies maybe scattered around at different places, that you have a place where the person who is going to be the executor or trustee of your account knows where all these things are, because it's very difficult if something were to happen to you for people to find these things if you have it scattered around in different places. If you have a financial advisor, great. Let the person who's going to be the trustee administrator of your account, of your estate, know these things and know how to contact these people so they'll know how to manage everything going forward. It's very important. John, did you want to add anything there?
No, I think that's a point well taken. So I would assume that we could go to the next slide.
Okay, please do. So some very, very important takeaways for life insurance. Some of these we've covered. It's possible to get traditional life insurance even if you've had cancer. For instance, if you have been off treatment for 5 or more years, it's still possible to get life insurance in a traditional sense. That doesn't mean that your cost will be the same as a person who doesn't have it. It may be it'll be higher because the risk is possibly still there for your illness or your cancer to return. So other illnesses that you may have, a lot of people are dealing with not just myeloma. They may have heart problems. They may have kidney problems. Again, some of those things can disqualify you. They got a simplified issue and the guaranteed issue if you cannot get traditional insurance as a result. So, and again, if you have a term policy, please look around. If you've forgotten you've been paying for a term policy for years, look around and find out if you have a term policy, or you may have a paid up policy somewhere you've forgotten about. Review the policy to determine if it can be converted to a permanent policy if you need one. Or just don't let that term policy go away without considering the possibilities or options you have with it. You can convert a portion of it to a permanent policy, or all of it if you want to, without having underwriting required. The cost will be higher than your original term policy because now you're paying for a permanent policy, and because you're older. So keep that in mind as well. But do not let something expire without considering what your needs are now, and your needs are going to be in foreseeable future, because you may not have the possibility of going back and getting a policy for the actual value and not having to worry about underwriting as a result. So next slide. Well, so that brings us down to the end. We will be welcome to answer any questions. If you find yourself going through your policies after this webinar and you want to reach out to talk to us, or reach out, and we would be glad to go over those policies with you or explain what that means, what type of policy you have, what it means. In addition, reach out to your life insurance agent who supplied the policy to you. If they're no longer around, reach out to the company. They'll be glad to review those options with you. Any questions?
Thank you so much, Diahanna and John, for sharing that information with us and for the research that went into this presentation as well. I really appreciate both of you. Diahanna, let's get your video on, and then we don't have any questions right now. I feel like you guys covered so much. And now the questions start coming in.
Okay.
So Nancy's wondering, how does the life insurance interface with the option of assisted death in states where it is available?
You want to take that, John?
Well, I'm not sure that I understand that question. Let me hear it one more time.
Okay. How does life insurance interface with the option of assisted death or euthanasia in states where it is available?
Well, I'm not sure, Diahanna. You might need to give me a little help on this one, because I'm not sure what the interface would be. If you've held the policy for a specific amount of time, that death benefits should still be available.
Right. A lot of policies, if you look at the beginning of the policy, it'll tell you if you committed suicide within a certain period of time from the origination of policy, then you will not get a death benefit. Or if you participated in things like questionable behavior, jumping out of airplanes like I do, maybe I should review my life insurance policy or stop jumping out of airplanes, or you're racing cars. But the assisted suicide is a fairly new phenomenon. I think before I give you an answer, yes or no, I would like to review that a little bit more. I appreciate you bringing that question up, and I think it's going to be something that probably rears its head a lot more often than it has in the past. I would like to get back to you on that. If you could reach out to us, that would be great.
Awesome. Thank you. I guess maybe, and maybe it's just because I'm young, but I don't really understand life insurance, and maybe everybody here does, which is great. But I always just assumed you pay life insurance so that when you die, your family can get money, or whoever is your beneficiary can get money. But from this presentation today, I'm understanding that that's not exactly true. Are you able to like get money as you pay money, or how does that work?
That's very interesting. It depends on what type of life insurance policy you have. Um, Most people understand life insurance as you buy a life insurance policy. So if it's something were to happen to me, then my kids
Mhm.
are taken care of, they'll still have a place to stay, they still can go to college, and that would be a temporary policy. And it's a great policy. However, life insurance has evolved so much more than that because everybody's needs have changed. Life insurance can be used for, like you said, final expenses, to take care of your children or other needs, to pay off a house, to take care of someone who's left, a spouse or things like that, which I found very handy after my husband passed. But life insurance can also, depending on the type of policy you have, you can get into the death benefit or cash value prior to death. You can use life insurance even to supplement retirement
Hmm.
benefit, retirement income. So depending on, and that's why I say, depending on what your needs are, and you may not even know what your needs are. That's why John and I really encourage people to speak to a financial advisor. That way they can help you determine what type of life insurance you need, and maybe more than what type of life insurance, and how much you need and why you need that life insurance. And it doesn't just look at that one person, also looks at the needs that your spouse, what your life insurance your spouse has, and what your estate, the value of your estate, if you're going to have, if you have a sizable estate and there may be tax ramifications. Life insurance may help take care of that taxes where the beneficiaries won't have to sell off their assets in order to get a little bit of the assets maybe left. So life insurance can take care of so many needs. And that's why a person really needs to review and speak to someone who can bring up the questions they may not know to ask about life
Yeah,
insurance.
that's fascinating. Thank you. Thank you for that.
I would like to jump in a little bit on that. And,
Yeah, please.
I'm working with a client right now who is terminally ill. And he called me to tell me that he's got this term insurance policy and the premium next year is going to multiply by 10.
Hmm.
Now, term insurance is exactly that. It's designed for a term of time. So if you bought a policy with a 20-year term of time, that policy could stay the same cost for 20 years, but in the 21st year, they're going to give you a bill that's going to be 10 times what you paid before. So I use two analogies to illustrate this point. If you were an insurance company and I was a 99-year-old man and I asked you to sell me a $100,000 death benefit life insurance, how much would you charge me?
A lot more than 100,000.
Yeah, you'd probably charge me about $100,000. But if I was a 20-year-old person, very healthy, I might charge you $1,000. Okay, so that's the underwriting process of age. The other question I ask my clients would be, when are you going to die? And they go, I don't know. And I said, exactly right. You don't know. So I had a child who passed away at age 32. And who would have ever guessed that that would have happened? But it did. And I didn't know that when she was 5 years old, I bought her a life insurance policy, thinking I would give it to her when she became a mom. So at least she had something. Turned out she needed it. And I was glad I bought it for her when she was 5 years old and not waited. So as Diahanna said, it's a very versatile financial tool, and it's important to talk to somebody who understands all the different ways that it can be used and show you an unbiased rationale for your particular life situation.
Thank you so much. Thank you for sharing that too. And I didn't know, I'm sorry for your loss. a couple more questions. How do we avoid the scammers or the people that are trying to take advantage? I feel like that's maybe an easier trap to fall in, especially for those who are chronically ill. How can we recognize scammers or people that are trying to take advantage, people that don't give you that unbiased opinion?
Right. Well, I'll just jump in a little, Diana, and then you follow up there. Number one, there's a lot of mythology and there's a lot of misinformation on the internet. And even though there are sources and reputable sources for policy information, life insurance planning is really that. It should be based on your particular life situation. And I've been a believer, I obviously biased because I was a financial planner for almost 40 years.
Mhm.
I believe in that planning process. And one of my clients said to me once, she said, you know, sitting down with you is like sitting down with my therapist for an hour. And it's because I really want to know not only what your financial situation is, those are the facts, but what I really want to know is what you care about, what you value. Because I have heard many different scenarios, some of which were very surprising. But I want to know what you care about, and I want to know your life situation. And when I understand that, then I can go forward to present, or a good advisor could go forward to present an unbiased solution, or maybe several solutions, and help you pick the right one. Would you agree with that, Diana?
I would, and it's really interesting. John and I think very much exactly the same about planning. And as a financial advisor and planner, one of the things that we do, what's important, is to not just look at a person's assets. You know, that is doing a disservice to that person. And we have found, at least I have found, that the foundation of success for a person to be able to retire what they need, to anticipate things that's going to happen in life, whether we know they're going to be like illnesses or change in the economy, is one thing we know. Everybody knows you're going to die. But we need to make sure that the things we're going to need in place for not just ourselves, but our family, the foundation of every good plan is life insurance. And if you're sitting down talking to an advisor and they don't even bring life insurance up, you might want to consider talking to a real advisor who's gonna look out for everything, because that person is looking at assets only, and that may be okay for some people. But I truly believe the foundation of good financial planning, of good planning for your life, your spouse, your children, is life insurance, because it can solve and help so many things when you're alive and after your death.
So even, like we talked about, even though there are higher costs for those with cancer to get life insurance, that guaranteed policy, you would say it's worth it.
It depends on what they are, depends on what their needs are, and depends on what they can afford.
Okay.
Right. Now, I'd like to go back to the question too, is how you can avoid scammers. So one is to be careful about the internet. Number two, I would say, talk to your friends. Do they have an advisor that they have found valuable to them? It's an interesting statistic that says that most people don't like life insurance, but they like their advisor. So you really do want to talk to your friends and see if they have someone they've been working with, or someone they feel really has been in the business, been in the profession for a while, working with a reputable company, and they feel there's somebody they can trust. That's where I would start.
Awesome.
Your state insurance department will actually have, insurance companies are rated. And you can also do background checks on agents before you do anything with them. And I encourage everybody to do that as well with financial advisors. You can look on the FINRA broker check and find out if there's a history or there's been some problems with that advisor, because it's required to be reported. That's also good. That's always good to do your due diligence before you give out any personal information like credit cards and sign on the dotted line. it's always better to do your due diligence ahead of time than to try to make repairs later.
Mhm. Mhm. Okay, thank you. Okay, we have a question that says, if my life insurance beneficiary dies before I do, and I forget to change the beneficiary, what happens after I die?
That's interesting. If you don't have a contingent beneficiary on there, it may go to the estate. It might be considered. They'll look and find out who the next heirs are, or relatives, and it may be divided that way.
Okay. I had a question about our population that are diagnosed younger than 50. I saw in the guaranteed policy that it's normally or maybe around 50 to 80 or older. But what happens, or what would you suggest for those that are currently being diagnosed in their 30s and their 40s and have young children at home and wondering about their financial future?
I can tell you, I was in that situation when we were in the process of getting a life insurance policy, additional life insurance policy for my husband. When we found out there was something wrong.
Mhm.
And then at that point, a lot of cards are off the table. And we did have children who were in middle school. We'll be going to high school. And so there are a lot of things changed. So generally when you're at that age, you are working. So I'd encourage you to look, one of the first places to look, for at least the least cost, is to look through your employer to find out what kind of benefits you have through them. Max out if you can afford to max out that. A lot of times they'll give you 1 time, 2 times, 3 times, whatever your salary. And then maybe if they have supplemental life insurance policy, also purchase that supplemental life insurance policy. As long as you're working, you can at least have a policy through there. And some of that policy may be, like John was saying earlier, may be part of guarantee issue, can be portable in the event you cannot continue to work. And then look at those other places like credit cards or unions and things like that. Because when you're younger, I think that is the biggest stressor that a person who has younger children worry about. What if something would happen to me? What's going to happen? And life insurance is what protects you. And I know the crowd, the people we're talking to now already understand that. They see the limitations they may have now. But for those spouses who are listening, who are younger, just because your spouse may have a problem, may have a health issue, does not mean that you may not have one as well.
Hmm.
I think it should be a wake up call for everyone, to look at your own circumstances. And if you're married with young children, your spouse may have illness, and if you don't, get life insurance for yourself. Spouses, especially women, have a tendency to undervalue their lives. And a lot of times the male's part of the equation have more life insurance on them. And that is not necessarily true. In fact, a lot of women, because of the cost of staying home, taking care of children, if they have to work, then the cost of what they're doing is so much more expensive, more costly than what husbands may be doing at work. So I would suggest that spouses look at their policies and maybe get more insurance, and to pick up where the spouse who couldn't get insured or have less insurance, to pick up that cost or that need they may incur later on.
Okay, that was going to be one of my questions. Do you suggest that the care partners also get life insurance?
Yes. Also, and review what their needs are and what their goals are as well. Yes.
Okay. John, did you have
There are policies available where, let's say you have a couple and one spouse is ill and may not be able to get underwritten policies, but the other spouse is not. That spouse could secure life insurance on him or herself. And there may be, not all the time, but there may be a rider available that says, if you buy a policy from us, we'll give your spouse and children X amount of coverage, no questions asked. It may be very small, maybe $5,000 or $10,000, but at least it's something.
Right.
Awesome, thank you. We have time for a couple more questions if people want to continue writing in what questions they have. I appreciate this discussion personally because of my changed view on life insurance and what it means and what a financial tool it can be. So thank you for providing me with that information that I was obviously unaware of before this. Is there any last pieces of advice or anything else that you guys want to say before we finish up here today?
Well, I
think-
appreciate the opportunity. Sorry, Diana, but
Go
I
ahead.
personally appreciate the opportunity to speak to those fellow myeloma patients or caregivers out there in the world. And please know that we are available. So if questions come up in the future, don't hesitate to reach out and call.
Great.
John, did your slide have your email address? Could you go on and give everybody your email address?
We'll
Best
include how to contact both of you in the
Okay.
follow-up email, so they should be able to find you on the coach website and make that connection with you to talk
Yes.
about finances.
I do want to interject here because we're talking about insurance. I think another big thing that I think a lot of people forget is disability policies, and that's something that's really big. I think we really need to cover that. A lot of people if they're ill, go on short-term disability, long-term disability, and they don't take advantage of that. They may think I just have to go on Social Security disability, but if they have a disability policy out there that they've forgotten they've had, that they
Mhm.
purchased some time ago and they're still paying for it. A lot of times if we look at we sign up for automatic deductions out of our checking accounts, and we don't pay attention to those things, and we already have policies out there that we've forgotten about. I suggest you look at those disability policies as well, because that's income that you may not be aware that you have available to you.
Okay, awesome. Thank you. Great. Well, we'll finish up, but thank you both so much. And like I said, I will include how to contact you guys in our follow-up email along with the slides that were shared today. Thank you both. I will finish with a couple outro announcements and then we can be done for today. So as Diana said, here's her contact information, but we'll include as well how to contact John in the follow-up email. Our next event will be I cannot believe it's November. It's going to be in January 2022. We're going to take a hiatus during December in order to get ready for the new year. And we're going to be talking about how to pull together out-of-pocket costs to prepare for your 2021 tax filing, 2021 tax filing. So we're excited to hear Diana's information on that. This next year, if I may share in the financial coach, we're actually going to be doing things a little bit different. We're going to be including interactive workshops within this chapter. So there will be informational sessions and then there will be workshops where we're able to ask direct questions and work on forms together, work on questions that we have together so that you can get your questions answered, financial questions answered in real ways. And we're really excited to bring that to you as part of the Myeloma Financial Coach chapter in 2022. I would also like to announce a very special event we have upcoming. We have the privilege to hear from Dr. Jim Allison, who is a Nobel Prize winner and an immunotherapy pioneer. His unconventional thinking led to the treatments that we now know as immunotherapy. If you're not familiar with immunotherapy, chemotherapy is drugs that try to kill all cells in order to hopefully target the bad ones. And immunotherapy is training your immune system to recognize and target bad cells only. And that is what is being developed and worked on a lot within different clinical trials right now in myeloma. And there are even immunotherapies that are approved. The CAR T CAR T therapy, for example, is one of these immunotherapies in action. You will have the opportunity to watch his documentary for free. It's called Jim Allison Breakthrough. And then you will come to ask him your questions on November 15th at 3 p.m. So sign up today. The link will be included in the slides. You can also sign up on the Myeloma Crowd website. And I invite you to invite all your friends and family that might be interested because this man is amazing and you'll want to hear from him. Other events that you might be interested in coming up. Tomorrow we have our Muscles for Myeloma Fitness chapter, which is finding inner strength through chair yoga with Jeff Abram. Jeff Abram is a multiple myeloma patient, so he understands back fractures and pains and fatigue, and has come up with this really versatile chair yoga routine that anybody can take part in. It's really exciting, and we're excited to have him back. The 4th at 1 p.m. Eastern is our stem cell transplant chapter. We'll be hearing from 2 myeloma coaches who will be sharing their experience and their advice about coping with hair loss before, after, and during the stem cell transplant. This is often the time when the hair is lost that people realize that cancer is really affecting their life, and that other people are noticing. And that's why we wanted to bring this topic to you, and we hope you'll join us. The 9th at 1 p.m. is the relapse refractory chapter. Excuse me, I don't know why my brain's not working. And we're going to be talking about cancer survivorship, how to optimize your wellness. Lots of times we think survivorship means after we're cured or after we're in remission, but survivorship really means from the day you are diagnosed onward. So learn how to optimize your wellness in the state that you are in right now. And then November 9th at 6:25 p.m. is going to be the SoCal Myeloma Community Chapter. We're going to be talking about Thanksgiving and receiving different resources that are for multiple myeloma patients and care partners, anything from financial to emotional support. Another thank you to our sponsors, without whom this would not be possible: Bristol Myers Squibb, Takeda Oncology, Karyopharm Therapeutics, Adaptive Biotechnologies, Oncopeptides, Janssen Oncology, AbbVie, Sanofi, Amgen Oncology, and Genentech. We're thankful to each of you for joining us today and for helping grow our myeloma community. We'll see you next time, and thank you very much, Diana. Take care. Thank you, John.